Hi, this is Mark Wallstrom, and welcome to Speaking of Settlements, a featured presentation here on the Legal Broadcast Network. Well, I'm here talking to you after 4th of July weekend, and there's some troubling news last week. You know, we've had kind of a, I wouldn't say a quiet summer, but the stock market since the beginning of the year has come back but retreated a little bit. We haven't had any major bad news from life insurance companies or casualty companies. A lot of the news that was concerning people late in '09 is starting to simmer down. But this whole idea of the economy beginning to recover, I think was really shot badly in the foot last week when unemployment numbers came in at far beyond what they had anticipated. The bottom line is that we're still seeing massive increases in layoffs. We're still seeing dramatic increases in unemployment. And one of the biggest things that's going on right now that I don't think people really grasp, we've had TARP, we've had the stimulus, we've had all this money that's supposedly been put into the banking system, and I think to a large degree it's worked. The fear about the banking system, the fear about the insurance system has lessened to a large degree, and things have stabilized. But what's happened now is the shock of late 2009, the impact of all of these near failures, the impact of the drying up of credit, the shrinking of hedge funds, the shrinking of wealth through the massive number of foreclosures, and the drops in people's personal wealth. We've got a very bad situation going on as far as jobs and employment. And I'm afraid it's really only going to get worse. You have to realize there's a lot of spin, I believe, that's coming out in the financial press. A lot of people don't want to make things worse than they are. No one wants to be a Cassandra, and I certainly don't want to be in that role either. But what I want to talk to you about very briefly, if you're a settlement professional or if you're just somebody who's looking and wondering what you should do with your settlement, is to think really long and hard before you turn down a structured settlement at this point in time. We don't know how long this recession is going to last. We don't know if it's going to turn into a depression. We don't know if it's going to morph into hyperinflation. Anybody who says they know what the outcome of this economy is going to be 6 months, a year from now, they're either far smarter than I are, or they're an idiot. I don't think there's any middle ground there. The bottom line is people just don't know. And in an economy that is contracting, as this is, and in an economy where people are losing jobs, and if people aren't losing jobs, one of the great unreported stories is the number of people who are having hours cut back or having pay cut back, underemployment. Instead of working 40 hours a week, they're being offered 25. Instead of being paid $25 an hour, they're now being paid 12. They don't show up in unemployment, but that loss of income, that loss of capital is profound. Spending has screeched to a halt. Economic activity continues to contract. Foreclosures continue to increase, certainly out here in the Southwest, as well as other parts of the country. And the Fed earlier this week released a report that showed only 3% of people who go for mortgage modification get the modification done. 97% of them are rejected. And the Fed's own conclusion was we should never have given this money to the banks. We would have been better off giving it to the consumers. All of these things add up to a very troubling picture that I think is going to put a premium on the ability to have monthly income, guaranteed cash flow. Guaranteed income and cash are going to be king, not in the short term, but in the intermediate and the long term. Right now, structured settlements with high-quality companies provide you the ability to have guaranteed money, guaranteed tax-free money, guaranteed income at a time where people are losing jobs, people are having problems with housing, people are becoming underemployed, they're dealing with pay cuts, maybe one person in the family loses a job, another one retains theirs. The vital importance of cash flow and the vital importance of income in this economy right now cannot be overstated. The one product that gives you tax-free, guaranteed cash flow is a structured settlement annuity. There is no other product that provides for that. And if you are settling a tort claim or if you're working in the settlement industry, we just have to spend a lot more time, and we need to really drive home, yes, yields are relatively low because interest rates are low. Yes, we've got other competing investments that people may want to look at. But at the bottom line and the nuts and bolts of it is that if you can pay off any installment debt that you have, if you can pay off any high interest debt that you have, and then convert the rest of your settlement into a highly secured, guaranteed cash flow that you know is going to come in every month, that has tremendous value for you and your clients. Think about it. If you're a settlement professional or if you're a person who's looking at a settlement, I urge you to check out the NASTA website, check out the SSP website, or call my firm, Wallstrom & Associates. That's WAHLSTROM and Associates. We're right out here in Scottsdale. And we'll talk with you about the importance of guaranteed cash flow that you get from a structured settlement. Thanks for joining us again this week. We'll have some more tips and more news next week right here on the Settlement Channel.
This is Scott Drake, and we know that as an attorney, you're very busy. That's why we have more content just like this at your fingertips, conveniently located at LegalBroadcastNetwork.com. Thanks for watching.